Welcome everyone to Crop Insurance Education for Every Farm. We have offerings available on basic crop insurance education for row crop producers, livestock producers, and specialty crop producers because every farm deserves a safety net. My name is Julia Barton. I am the Farmer Services Director with the Organic Farmers Association. I'm also an organic farmer located in Northeast Ohio. I wanted to mention before you dig in that there is some repetition in the various offerings for different types of producers. Some of that is because some of the programs are interwoven and some of them are available to multiple types of producers. So rather than listening to the same information more than once, if that's not a good fit for you, or if repetition is not your favorite way of learning, you have the opportunity to scroll through by chapters. And you can see at the top of the page here what that might look like. So there are different sections of the presentation that will be named at the top, and you can scroll through to learn about what is most relevant to you and your farm. So easily skip around and learn what you need to know. If you have any questions, please reach out. Be happy to try to answer them or connect you with someone who can answer them for you if I cannot. All right, here we go. Hello and welcome to Crop Insurance Basics for row crop producers, because every farm deserves a safety net. My name is Julia Barton, and I am Farmer Services Director with the Organic Farmers Association. I am grateful to be partnering with Oregon Tilth, Pennsylvania Certified Organic, MOSA Certified Organic, and NOFA New York Certified Organic on a project to bring crop insurance information to you. This project is funded by the Risk Management Agency through the United States Department of Agriculture, and we're grateful for their support. What to expect in this presentation. First, we'll talk a little bit about why we should care about crop insurance, some crop insurance background, some various crop insurance options for row crop producers, and then we'll have a little bit of, well, we won't have discussion here, but you're more than welcome to reach out so that we can discuss online after the fact. Happy to answer any questions, and if I don't know the answer, I will find out and circle back with you. Why should you care about crop insurance? Throughout this presentation, I wanted to mention that you don't have to take my word for it. You might remember reading Rainbow from your childhood. I remember it from mine. And LeVar Burton used to introduce a book and then inform everyone that they didn't have to take his word for it. And a bubbly child would share the story of their best read, their most recent favorite read. Well, in this presentation, we will be hearing from the members of the Organic Farmers Association Crop Insurance Work Group. And so you don't have to take my word for it on any of this. I am not the expert. They are the experts. So we'll hear from one of those members right now. Mainstream farmers will say that the most important part of the Farm Bill is the safety net. I began to question that through my work with small and mid-sized farmers when I realized they don't get insurance. These policies are made for certain farmers growing certain crops. And that's from a Midwest Extension employee who works with small and mid-sized farmers. So why should farmers care about crop insurance? Farmers all over the nation are experiencing extreme weather events. So we saw hurricanes in the Carolinas this past year. We've seen lots of fires on the West Coast. And all sorts of swings in between. And farmers are farming in environments that are out of doors, that are unpredictable, and they have to be able to have something to rely on, to fall back on. We're also experiencing consolidation in land and markets. This is particularly challenging for beginning farmers, but it affects everyone. And the goal of the crop insurance system is so that a farmer can farm again the next year. So a safety net for every farm is what we're going for. And here we'll talk a little bit about how organic producers and transitioning producers in particular can be aware of some crop insurance items that might work for you if you're not already utilizing them. Here's another quote from that extension employee. There are barriers not just to crop insurance, but to accessing reliable and credible information about crop insurance. So we're hoping to fill that gap a little bit here today. Here is some crop insurance background. So taking a look here at this map, we can see where there is greater and lesser utilization of USDA Risk Management Agency crop insurance programs. You can see in the upper Midwest, there's a good bit of use of these programs. The darker the square, the greater the use, and quite a bit on the West Coast. We can see that there's a dearth of utilization of these programs in the Southeast in particular and in other parts of the country. So there's definitely room for improvement in terms of making this accessible and usable by farmers across the nation. So how does crop insurance work? Crop insurance is purchased at a subsidized rate through a public-private partnership. So it is sold through private insurance companies by agents, but it's partially funded by the federal government with taxpayer dollars. There are different options for different scopes of production, and there are extra options called written agreements, which exist for crops that fall outside of typical crop insurance options. We'll talk a little bit more about that later. Accessing crop insurance can be tricky, and I want to make sure that you know that you don't have to work with a local agent. So sometimes the agents in your neighborhood are not aware of organic crop insurance options or, say, whole farm revenue protection options. So you can utilize these agent locators that exist online through the Risk Management Agency website to find agents elsewhere. And you can interview them and ask them if they have experience working with organic producers. It's really important, much like it is in organic certification, it's very important to communicate regularly and be really comfortable with your agent locators, with your crop insurance agent. So you want to find a fit, that's right for you. Now we'll talk about some crop insurance options for organic producers, and we'll start with one that you probably are familiar with. This is the Multi-Peril crop insurance, which is the longest standing and most widely used of the crop insurance products out there. It is available for major commodities. The big five are corn, beans, wheat, rice, and cotton. It protects against crop yield losses by ensuring a percentage of historical crop production. There's a particular method for determining historical crop production, which is called annual production history, or APH. The way this is determined is an average over time of the same crop produced on the land managed by that farmer. And it can be very tricky for beginning, transitioning to organic and newly organic producers and ongoing organic producers, because the APH starts over every time a farmer engages in a new practice. So conventional practice would be one, transitioning would be another practice, or certified organic would be another practice. So there's not much time to build up one's annual production history per crop. Further, it's challenging for organic producers to utilize the full benefits of this system because of diversified crop rotations. So the more crops in the rotation, the longer it takes to build up the APH. So this essentially disincentivizes strong, robust crop rotations for organic producers, which is an unfortunate reality. Here's Scott Myers from Woodland Acres Farm. He's on the right. That's Scott Stoller on the left there, who's an organic dairyman. These guys are both in Ohio. Scott tells us, when we moved to organic and tried to replicate the same method of crop insurance we were using before, which was multi-peril, what we found out right away was we had to use the county average yields, which in some cases can be 30 to 40 bushels lower than what we were producing. So that's what Scott had to use in the absence of an annual production history, which didn't adequately reflect what he was capable of producing on that land. A good change that has happened recently in crop insurance with relation to organic and transitional growers is a thing called enterprise units. So these existed previously for irrigated and non-irrigated ground, for example, but now they've been expanded to support organic producers because one can use this unit structure to allow oneself to separate insured crops into different buckets. So conventional production can be a bucket, transitional production can be a bucket, and certified organic production can be a bucket. And one can choose one's coverage accordingly in a multi-peril crop insurance product. So here we hear from Eric Rieker with the Ohio State University Extension. Eric is also an organic farmer and an organic educator. And he notes that crop insurance is complex, but often required or desired by new to organic farmers. It doesn't take but one growing season for them to realize that organic growing crops is a much different system than growing conventional crops. So they desire to protect those risks separately, especially in transition. The new enterprise units by Organic Practice, now being offered by USDA RMA, allows for separate enterprise risk protection for these practices under the same multi-peril crop insurance policy and for a nominal increase in price. This will be a positive policy improvement for transitioning to organic and parallel production organic farmers. And Eric should know because he works with a lot of these farmers in a tri-state region in Northwest Ohio and the surrounding states, and has a very popular organic grain growers conference in that area. Organic price elections are another tool to be utilized by organic producers in risk management. So these price elections are available by commodity, and they're not available for every commodity. So the list needs to continue to grow, but many crops are there now and reflect accurately the prices that farmers can receive, more accurately the prices that farmers can receive for organic crops, which helps do the risk management calculation for adequate risk protection. So this allows the farmers to insure specific crops based on the contracted price. Oh, I'm sorry, this is the contract price option. So first we had the organic price election, which allows folks to insure to the organic price, but sometimes someone can achieve a contract price which goes beyond the organic price. And this is for both organic and transitioning producers. So if someone achieves a transitional price for their product, it can be also used in that circumstance. This can also be used on a contract price when there is no organic price election, which is helpful. There are also some other options and endorsements, depending on the type of policy, that a grower can choose a specific endorsement to strengthen coverage. So there's an example here with malting barley. So I grow this specific type of malting barley, and I want it to be I have a contract for it and I want it to be covered and insured at a higher price. I can use the malting barley endorsement to achieve that. Similarly, there's coverage that can be added to existing coverage for hurricane and tropical storm and high winds. So this is called HIPWI, which is the Hurricane Insurance Protection Wind Index. This is an endorsement to add specific coverage for hurricanes to a multi-peril crop insurance policy. This is like a very severe wind situation, like 74 mile per hour or greater, according to NOAA data. So the tropical storm option is coverage in addition to the high wind protection option. So you have to have HIPWI first in order to have tropical storm protection. And this is for sustained wind of 34 knots and greater and total rainfall of 5.9 inches or more in a 4-day period. And they tell you which 4 days those are. And the way this works is that there is the acronym National Oceanic and Atmospheric Administration, or NOAA, data is used to determine the precipitation and the wind on a grid system. So the hurricane or the tropical storm event unfortunately occurs, and then within 2 or 3 weeks, RMA publishes which counties were affected according to the weather data. And then within 2 or 3 months, NOAA and the census data reviews everything that was collected during that storm and publishes new counties that triggered a tropical storm payment in addition to the hurricane payment. And then in the spring of the following year, The National Hurricane Center reviews the hurricane wind data, and RMA publishes any additional counties that have triggered the hurricane payment. So in addition to these endorsements, there's sometimes a crop for which there just isn't coverage in the existing system. And so this is when a farmer can engage in a special request for a case-by-case agreement with the risk management agency for coverage. The type of information needed for that negotiation would be planting and harvest dates, 3 years of the producer's production history of that crop or a similar crop, and then information about a county where that crop is covered to help make the case that it might have analogous conditions to the county in which one is trying to grow the same crop. The coverage for a written agreement begins at the latter of two dates. So either when RMA accepts the farmer's application or the crop planting date. Then there's an option that's available for those operations that might be more diversified. So whole farm revenue protection was born out of the sustainable agriculture movement. Our colleagues that are members of the National Sustainable Agriculture Coalition, of which OFA is a member, and others worked really hard to bring this form of crop insurance into reality, to be an option for folks. So it is designed for diversified operations for a farm with up to 17 million in insured revenue, and it covers multiple crops and livestock under one policy. It is available in all counties in every state of the union. Here we hear from Noah Went. He is the farmer on the right. He says, whole farm revenue is something not many insurance providers know enough about. And Noah should know because he is also a crop insurance agent. And here we hear Scott Meyer's opinion on working with whole farm revenue protection. When it initially came out, it had some hitches to it, and it's improved over time. And Scott notes that here. I have a lot of experience with crop insurance. When we decided to transition to organic, our agent was telling us about whole farm revenue policy. We quickly realized that in organic, we were significantly unprotected. It was a paperwork nightmare. We weren't getting insured the way we needed to. It was a mess. We eventually went back to using whole farm revenue after I was made aware of some of the changes that were made. We're about 3 years in at this point, and this time around, the process has gone much smoother. So whole farm revenue protection insures based on the whole revenue of the operation rather than on yield history, which is why it works for a diversified operation. It does include replant coverage for annual crops with some exceptions, and it offers a range of coverage, as do most insurance products. And as we noted earlier, there is an agent locator specifically for this type of insurance so that you can work with somebody who's got some experience. Here we hear from Scott again. Crop insurance is supposed to allow us to farm another year. It's not supposed to guarantee us a profit. When I buy car insurance, I don't insure it so when I have an accident, I get a better car than I had before. I just get it to have wheels to drive. Whole farm revenue protection is designed to make sure I have wheels. And that's Scott there. He invited his representative, Max Miller, out to his farm, and it was the first time Representative Max Miller was on an organic farm last spring. So there's also a MicroFarm program, which is a subset of the whole farm revenue protection program, which is oriented towards smaller farms. It does minimize underwriting and record keeping requirements, and producers do not have to report the expenses on individual commodities. So this could be an option for somebody that fell under that $350,000 in insured revenue annually, and it works pretty similarly to the whole farm product we just discussed. So here's a microfarm example. Jill and her family run a small CSA. In addition to the CSA, they raise pastured poultry and make jam out of a 1/4-acre raspberry patch. MicroFarm would enable Jill to insure the revenue from all of these enterprises in one policy. Pasture, rangeland, and forage is another piece that would apply to diversified operations. So say you're a row crop producer, but you also graze. PRF is one of the products I've had the most positive feedback from growers about. So this is useful for various types of producers. It's based on a rainfall index rather than actual losses, since the moisture is the predictor of yield. So again, we're using the NOAA data, National Oceanic and Atmospheric Administration. This is from the Climate Prediction Center, and it has a grid system, which the rainfall index uses to determine precipitation amounts within an area. The beautiful thing about this type of insurance is that producers do not need to file a claim or submit any kind of documentation for a loss. The data, the precipitation data is what is used and what triggers the payment. So payments are made after rainfall data is collected and shared with risk management agency for each 2-month index interval. And you have to choose a 2-month interval for which you kind of most need the rain, essentially. But producers say this works really well for them. That's what I've heard. We also have crop insurance for transitional producers, which I wish was more robust than it currently is, but we'll discuss it such as it is. Producers who have crop insurance coverage on crops in transition to organic are eligible for premium assistance from USDA. But in order to receive crop insurance at organic rates, the transitional grower needs a transitional production plan, or a TPP. So a certification body must review the organic system plan, or the TPP, and approve your operation as transitional in order for you to access that crop insurance. One can find a certification agency to review the TPP through the USDA Transition to Organic Partnership Program. Wanted to also mention a separate topic, which is the Non-Insured Crop Disaster Assistance Program, or NAP. NAP is administered not through the risk management agency, but rather through the Farm Service Agency. It is not insurance. It is disaster assistance, but it can be part of your risk management plan for your farm. So when there are low yields, inventory loss, or prevented planting due to natural disasters, that's when NAP would kick in. Farmers can participate in whole farm revenue protection and microfarm and still participate in NAP. So it can be layered protection. And it's important to note that beginning, limited resource, socially disadvantaged, and qualifying veteran farmers are eligible for a waiver of the service fee and a 50% NAP premium reduction. So that's a good option to take advantage of there. Here are a couple of NAP examples to illustrate how this program works. So Sal's strawberry field is damaged by a severe drought. NAP will cover the loss of income to Sal due to the drought, but it won't cover the damage to the plants themselves. Replanting cost will be on Sal. Or Rhea experienced a loss to her honeybee colony due to a hurricane. NAP covers the loss of the income to Rhea, from the honey she would have sold, but it does not cover the loss of the bees. So Rhea has to reinstall the bees and the queens on her own. That's all we have for today for crop insurance basics for row crop producers. We do have a survey link here, which we would appreciate you filling out. You can use that QR code to do so. And would also love to invite you to work with us at the Organic Farmers Association to think through how we can make crop insurance and other USDA programs and various other challenges work better for organic and transitioning producers. We have a number of work groups convening at this time, and we would welcome your participation there. So if you're interested in thinking through these issues more deeply in a group setting with other farmers, please check out that QR code there or shoot me an email, julia@organicfarmersassociation.org. Thanks so much for your time.